G'day traders, today we're going to be talking about stop hunts and consolidations. Stay tuned, we'll be right back. We're going to review our FX trading strategy simplified. We talk about basically 8 areas that we need to focus on that we can duplicate every single day, which are simple. I know there's a lot of questions. Thank you for a lot of tremendous feedback and a lot of questions. We'll try and break each one of these questions down into a little short video each day, tying in all these 8 steps, but we know that within each one of these steps there's a bit of an onion to peel back for the complete unconscious competence or understanding how that applies in live time and how that becomes secondary in your thinking process, recognizing that all these tie in together. So we talk about structure, we can talk about trend lines, geometrical patterns, head and shoulders, double tops, rectangles, double bottoms, ascending triangles, descending triangles, the main major reversal or continuation geometric patterns, which can give us not only structure for measured movements for bigger targets, but also a bias or a thesis of where this market may be heading towards in our weekly template. So structure is really important. That just gives us our big picture. High of day, low of day, yesterday's high, yesterday's low. We talked about that in one of the most recent videos, the significance of breaking a previous day's high and low. Today we're going to be talking a bit more about today's high and low of the day and how consolidations and stop hunts throughout the course of the day can give you a really strong idea about where some of the bigger trades will take place, but also into the session changeovers where we can be positioning ourselves. Then we talk about the timings, the importance of the market equity opens, the 3-hour rotations of those timings. So again, 8:30 to 11:30 p.m. New York Eastern Standard Time. 7:30 to 9:30, 10:30. That's the 3-hour window for Asia. And again, some of these windows we're going to talk a bit more specifically about Asia today. But again, 2 a.m. to 5 a.m. New York Eastern Standard Time, and 8 a.m. to 11 a.m. New York Eastern Standard Time for the New York session. Then we're talking about numbers, double zeros and 50s. Most of the major levels are double zeros and 50s that the institutional levels trade off of. Now, if you really want to get more advanced, we'll talk about this in another video, but I'm convinced that the bulk of all trading done on these markets is by computerized algorithms that work off timing, and numbers. Stop loss and profit targets. We know we want to have a 1 ATR or a 1 bar stop, and our profit targets are going to be an asymmetrical range, either of 2-3 times our risk, or maybe even 5 to 10 times or greater in some of these bigger moves when we get into these larger geometrical patterns. And then trade management, not letting yourself get shaken out of a winning trade, not chasing price, getting poor fills, not fear of missing out, but being very calm and disciplined and relaxed, knowing that you have a plan in place to execute your trade at a specific level based on what price confirms for us. And we're going to talk about price and candle pattern information a bit more today in terms of how price reacts around numbers and highs and lows. And then, of course, self-management, not being emotionally attached to the outcome of a trade, not being impatient or revengeful or angry or fear of missing out, or having pain being a driving mechanism from being upset or suffering from a loss. And then we're going to have the review, improve, and scalability, which again, this whole process is about simple, scalable trade setups that show up over and over again so that you can trade them bigger and better as time goes on. Think about the big picture over the longer term, focusing on executing your trading plan flawlessly, mastering your craft, and then scaling it up in size and getting better. Okay, so one of the things we want to talk about today with stop hunts and consolidations is, again, the 3-hour rotations that we talked about. We've talked about this before. We're in the rollover, from one day to the next. We see the market in that first 12 candle window. We see all kinds of activity. The spreads widen. We see sometimes they'll stop hunt out. We said it does normally 3 things in that 12 candle window. It's almost impossible to trade because the spreads blow out so wide, and they're usually clearing out orders, stop hunting profitable trades from the U.S. close, whatever they're doing. But because of some of that volatility, typically though, they will either be they will stop hunt to an extreme, so they'll extend the range out either down or up, or they will go into consolidation and tighten up after a move, or they will stop hunt within one of these boxes, double zeros, 50s, back into a trade from the previous session. But what's important is that 2 things. The market will either move away in a stop hunt motion, or to an extreme, to a new high or to a new low, or to stop out an existing profitable trade from the previous session. Okay, so if the market takes off and goes to 50, now again this market may come right back to double zeros. Just hypothetical numbers here. That could be double zeros and 50, could be a high and a low. Or the market will go into consolidation as we head into the Asia Open. So if we have a consolidation at numbers, and we have some kind of candle formation confirming an entry, the market will often come back to this level. Now chances are that because the market has done the stop hunt in the crossover, that it will stay in an extended consolidation or continue into the next box. It may not go all the way, it may pin up part way into that 12 candle window. So again, the market in that 12 candle window prior to the Asia Open at that 8:30, 7:30 p.m. New York Eastern Standard Time, p.m. New York Eastern Standard Time, now will either be what market profile people would call is out of balance, or it's in consolidation. So it's either in consolidation or it's at an extreme, painting a high or a low. Now, if the market is painting a high or a low, we want to leave that area. But if we're in consolidation, we can identify at any point a market in consolidation as a potential area for taking a trade either short or long, depending on what the price action is telling us. If this is purely just a 1, 2, 3 stop hunt consolidation, I would expect this market to come back down and possibly go right through the low and extend further down in Asia in that next 3-hour window. Now this could be a 6-hour window down, but chances are they will do this in 12 candles again before we go into possibly a stop hunt back on traders who have shorted it here, and then have a consolidation into the Asia close. Now the most important times are the Asia Open and the Asia close, which is sort of in that 1 a.m. to 2 a.m. New York Eastern Standard Time. So the concepts that I want you to grasp is that the market is either in a consolidation or it's in a trend or a stop hunt, whatever we want to call that. If it's moving candle after candle, we'll call that a trend or a stop hunt. So there's two phases to the market: consolidation or stop hunt or trend. So when we head into that 1 a.m. to 2 a.m. New York Eastern Standard Time, if we're in consolidation at numbers and there's a high or a low that's already painted, chances are now that Europe London Open is going to come back. It's going to do one of two things. It's going to stay in consolidation, or it's going to stop hunt back against the trend. So if we come back to our concept of being inside, if we're inside of the high and the low, we're inside of the box, that market now is either going to be inside where we want to stay away from this. We want to wait for it to either stop hunt outside or give us some sort of breakout pullback for a trend move back up from that original move off the bottom. But our main concern is that if it's in consolidation, chances are we're going to see a stop hunt to the extreme for that London Open. If the London Open ends up being down here at the bottom, chances are now we're going to see a London setup at the numbers, possibly into that third hour, again the hour rotation, the end of the four 15-minute candles in that 12 candle window that give us our hourly rotation for a move back up towards the high of the day from the low of the day off numbers. Now, if this market was to break back inside and pull back to the numbers, again, we could see this market do the same thing. But again, consolidation or impulsive trending stop hunting market. But this 12 candle window, if we break it into 8 3-hour cycles throughout the course of that day, the same thing will apply as we head from London into that 3-hour window, and then the 3 hours prior to the New York 12 candles. So we constantly keep breaking this down into 3-hour rotations. Okay, we'll try and make this a little simpler. We'll say these are our numbers. Think about the day as being inside of a box. You're inside of a high and a low, or you're at the high and the low. We talk about two places to trade, either at numbers or at the high and the low. Now, if we just use a simple analogy that when the market's trading and it sets a high, it sets a low, you're either inside of the box or you're at the outside. So as the day progresses, we have Asia, then we have Asia close, Europe, London, then we have a 3-hour window prior to New York, so 5 a.m. to 8 a.m., and then we have 8 a.m. to 11 a.m. Now throughout this, we will have the market going to extremes, pulling back. It will work underneath or on top of numbers. And again, it will make a new high or take out the existing high. Now I'm just using the analogy of breaking out on hitting highs during the timings. So obviously the market doesn't go straight sideways. The point I'm trying to make is that you're either inside or you're on the outside. Now, if you're on the outside and the market is in consolidation, or it's at numbers, or it's at a peak formation for a reversal, which could be a measured move back down in the timings, but again, the market is either in consolidation in the inside or on the outside. It's either working the low, working the high, or it's inside. When it's inside, this is 50-50. We want to trade on the outsides. Now again, just to put this into context, this could actually be a trending day. I'm just using the analogy of either being inside and the market pulls back, hits it again and continues to trend and pulls back. So you're either in consolidation or you're at the extreme. And when we're in consolidation and we're in a trend, obviously we want to continue with the trend if we're at numbers and we have structure. But if we're inside of a box and the market has taken out the high or the low at the timings, or we've gone to an extreme, so the market will spend 3 hours making a trend. It may spend 6 hours making this trend, or 5 hours and 1 hour back, or 6 hours and then take out into the New York Open, reverse, go into consolidation and continue that move, pull back and close in consolidation. 3-hour rotations, we said that they can either stop hunt, go into consolidation, right? Or extend a move. So if the market breaks out in that 3rd hour of London, takes off, goes into consolidation, continues the move, 6 hours, it's done 150 pips. Goes into consolidation, into the New York Open, reverses, hits the high on the open in that 2nd hour, reverses, continues that move down, consolidates, and goes into the close at the bottom of the session. So stop hunt, consolidation, or extending the move. Okay, so every 3 hours, start counting these candles right from the session beginning. So the rollover could be a stop hunt, it could be a consolidation, or they could be extending a move from the previous session's close, which is why we see some of the closes continue into the next day without a pullback until the next day, which is really important because this appears to have taken out the previous day's low, which it has, but in reality it's still a trending market. The market pulls back, hits it 3 times, rolls down, and does a continuation down. So stop hunts and consolidations, really important at the timings in these 12 candle windows throughout the day. Asia rollover, Asia open, Asia close. Did Asia paint a high or a low, paint both over 6 hours, or did they do that in 3 hours and then consolidate into the Europe Open? Does the Europe open up as an extension of the Asia range? Does it? And you'll often see this on a Monday for a weekly high or low when the market extends out into the Europe London Open, 3 levels of rise or fall. These could be 50 pip boxes, they could be 25 pip boxes, but you'll often see that third extension out into the London Open for the reversal and a big move back down, possibly through the low of Monday. They come back on Tuesday, hit the high again. There's your box for your rectangle for the week. So really important. This may seem like a lot of information, but the big picture that I want you to get out of the stop hunt and consolidation is, as these 3-hour windows paint, is the market in a consolidation or is it in a stop hunt? Often the stop hunt or the trend, whatever we want to call it, will give us one of the extremes or both. We'll look at some examples on some charts. Hopefully that makes sense. 3-hour windows, again, is it a stop hunt or consolidation? Where are we at in that cycle? If we're in a consolidation heading into the Asia close, we're going to get a move heading into the Europe London Open. If we're already extending out at the Europe London Open, chances are they could extend it more or break out, pull back, stop hunt back into the trade from Asia, pull back, hit the low again for a reversal off the top or the bottom, or if they extend it out, which we'll see in a trending market, or a Monday, Tuesday extension where we're painting out a second day trade for a further out high or a low. But again, 3 things: stop hunt, consolidation, or stop hunt or trend, right? Consolidation or an extension of the move. A stop hunt will typically end at a level, at numbers, or at a high and a low. Consolidation will usually happen at or near numbers. The extension of a move will be where the market has moved, it goes into consolidation and continues that move, either higher or lower. Hopefully that makes sense. Hopefully that clears up some of the questions that we've got. We'll look at some examples now on the charts. Stay disciplined, traders. Have a great trading week. Thank you for hitting the like button. If you have any other questions, please put them in the box below. We're trying to get to all of them. We're going to maybe start doing a Friday coaching session where we can answer some of those questions in one live session. Have a great trading week, and may the markets go with you.
Okay, traders, just to go over an example of each day, how we can look at our structure and identify, is the market in consolidation or is it in a stop hunt or a trending phase? So we talk about this first 12 candles. For the most part, I think it's untradeable sometimes because of the spreads, how they widen the spreads, and sometimes that can take a few hours before they're consolidated. But essentially what we're looking to identify is the price action that they paint in that first 3-hour window. So in this particular case, on the pound New Zealand this week, they've gone up and then came back down to the numbers. They're above double zeros, but typically that's a stop hunt back into the traders who shorted that market in the US session. Then that market comes through the numbers and consolidates, stop hunting traders who were long off the bottom if the spreads didn't get them already. Then the market goes sideways into the Asian Open and crosses across the double zeros with an engulfment candle, which is an entry for the move initially right back to the high of the day, but that should go straight through to the numbers, which is a stop on traders who shorted that market in the previous session. But what I'm more concerned about is that the market consolidated at the numbers and then broke through at the Asian Open. Timings, structure, double zeros, asymmetrical risk reward. If we were entering this market at the bottom of a double zero box on a candle formation, you could limit order off the numbers if you want. You can take this candle, it's a 1 bar stop, and you're targeting the double zero or the 50 level. The market goes up 1, 2, 3, hits the target, goes into consolidation. Again, our 3-hour window now, 6 hours. 6 hours, we get a double top on a smaller time frame with a pin hammer, pin outside structure, second shoulder with a pin through the numbers for a short trade back down, stop hunting traders who were long in the Asian Open. The market then goes into consolidation sideways before breaking across the double zeros again at the end of the Asian session as we head into the Europe Open. Engulfment candle above the double zeros at the timings with an asymmetrical risk reward target. Again, this market does not have to go all the way to the high to stop out traders who may be at break even, who have moved their stops, or who got in at the numbers. Our target is the numbers. The market goes into consolidation, 1, 2, 3, inside bar. Back down, stop hunting traders who were long off the Asia close. Now, obviously, we're in a range-bound market, but the point I'm trying to make is the market in consolidation, or is it in a stop hunt trending breakout? The market comes down and reverses immediately on a 3-bar engulfment for a move back in the opposite direction. There's a bit of consolidation at the peak. Some traders would have been caught short, but again, this is why the timings are so important. The market has come down to the low, reversed off the bottom at the end of our 12 candle, third hour, in that third hour of our 12 candle window at the London Open for a reversal back to the high. Traders who trade this short are trading back into the breakout off the low of the day. That's the difference than a 1, 2, 3. This market has broken out, pulled back, and continued its move up. The market has gone through. So traders at this point have either taken profit, gone to break even. So if traders have gone to break even and not taken any profit off the table, they may have been stopped out at break even. The market stops these traders out. The market continues, fills more orders, and continues up, pins the previous day's high, and goes into consolidation right prior to our 12 candle US Open window with a double inside bar. Sorry, not a double inside bar and a little pin hammer at the double zeros after its consolidation. So is the market breaking out and stop hunting or trending, or is it in consolidation? Consolidations will typically happen at highs or lows or at the numbers. Then the market reverses, stop hunts down, breaks out up, stop hunts down, breaks out up again, 100 pips up, consolidation just prior to our US 12 candle window. The market sells off from the double zeros for the measured move down. Consolidation as we get through that middle of the move at the day's low, and also the low of the previous day, which again is where we see that consolidation, continuation of the move down. So if we go to the next day, again, we do the same thing. The market in that rollover section goes into a consolidation. Sideways market, we can't trade that usually because of the spreads and the volatility. But again, it's one of three things: a consolidation, a stop hunt, or an extension of a move. This market then, as we head into the beginning of the Asian market, goes 1, 2, 3, pins Traders who were short from the previous night's close, consolidation for 2 hours before breaking down below the double zeros, going sideways again into the Asian close for a 1, 2, 3 down to the low of the day. So the market was in consolidation above the double zeros, broke down below, stayed in consolidation before in the Europe, at the Asia close, Europe open, timings, numbers, consolidation, 1, 2, 3, pulls back at the Europe open into the London open, 1, 2, 3 down for the reversal, stop hunt back to the high. This is Good Friday, so obviously a bit of thinner volume. But if we scroll back earlier in the week, we can pick Monday. The market in the rollover of the Monday open, gaps down. Again, that volatility in that first 12 candle window. 1, 2, 3, stop hunting traders who may have been short at the close of the session on Friday night goes into consolidation. At the beginning of the Asian session, 1, 2, 3 down on traders that may have been long on pending orders on the open of the market session. Then the market goes into a consolidation pullback. Back to the numbers, stop hunting traders who were short, 1, 2, 3 down to the numbers without taking out the low, pulls back. Then at the Asia close, 1, 2, 3 down, consolidation pullback, 1 push, 2 push, 3rd push, and then underneath the previous day's low, we get a 1, 2, 3 down pullback and continuation for 100 pips down. That was the example we talked about on the board where the market will consolidate, extend the move, consolidate, extend the move, consolidate, extend the move. That's a trending market, creeping trend, but it's a consolidation, extend the move, consolidation, extend the move. Again, we head into the U.S. session. They stop hunt the low of the day before pulling back, stop hunting traders who were short from that move down midway, consolidate up to the numbers before 1, 2, 3 down into the close, and continuing that into the next day's session. Again, an example of where in the rollover, the market goes into consolidation. Into the Asian market, it stays in consolidation. And then 1, 2, 3 towards the second last hour of the Asian market for breaking down into the Asian close, Europe open. 1, 2, 3, consolidation at double zeros, engulfment candle for the move back up to stop hunt traders who were short. So hopefully that makes sense, traders. Stop hunt or consolidation, 3-hour windows, sometimes it's 6. If the market consolidates over that extended period of time in the timings, look at structure, again, rectangles, round numbers, timings, consolidations, stop hunts. Keep it simple, traders. The market is either in a stop hunt if you're inside of the range. Wait for that market to give you price action, confirming an entry off of the numbers, back to the extreme, or wait for the market to go to the extreme to see if it confirms a thesis for a trade back inside for a stop hunt in the other direction. Stay disciplined, traders. Stay focused. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.